Okay, and we are welcome to our. Today is June 19th. It's a big day in our family. Our little boy becomes a big boy. Today it's his graduation day. So we're up in Leeds, north of England, where he's going to receive his certificate. I look a little bit lopsided, but that's the way it is. Okay, so let's start with the usual look at the economic calendar first. There are some things. There, in a way, it's been quiet on the crypto front, but at the same time, there's lots of things going on in the background. First of all, obviously, you all heard of Donald Trump and the assassination attempt, and we'll have a look at the effects it might or it might not have over crypto as well. This is the economic calendar for the week, and then we'll have a look at what's in store for next week as well. Fairly quiet this week. Oh, by the way, can you hear me properly? Because I've got my headphones on. If the sound is not good, I can revert to the computer sound. But, can you just let me know by voice, please? Okay, fantastic. Oh, sorry, you can see my screen. All right. I thought I shared it. No, I haven't shared it. Okay. Share screen. Entire screen. Why can't I share the screen? There we go.
Luca, you've gone silent, eh? I don't know if you've muted yourself. I think you muted, Luca.
Yeah, you look, you might be muted, but we can see your screen.
I think you muted, Luca.
Yeah, but we can see your screen.
Luca, you look like you're still muted.
Okay, I need to do this again. Just a second. Can you hear me now?
Yeah, it might be your headphones. Might be confusing the whole setup.
No. It's when you share system audio, your microphone gets muted. But that's fine. I won't share that, so should be okay now. Okay. All right.
Much better. Thank you.
Right. So let's start this. Okay. Can you see the screen now? Yeah. Okay.
Correct.
Fine. Okay. So not too much in terms of news this week. We had inflation figures from Canada. Again, no great surprises there. We're still going in the direction of going slightly around below 3%, slightly lower than expected, which follows the trend now. Things are normalizing. The same in the UK, where on Wednesday around 2% inflation at the moment. And by the way, it's not that things are getting better. It's just that the pace of the increase is getting a bit slower. But it's still, things are still more expensive than they were last year. The main thing of this week was yesterday, the interest rate for the euro, the interest rate decision, with the interest rate remaining the same at 4.25%. And then some job figures, the weekly job figures from the US. Now, just to go, Forex Factory only shows one figure. If we go onto Facebook, it's a little bit more granular. We can have a look at it there. So let me see.
There's somebody in the there is somebody in the waiting room.
So as you can see. Oh, okay. Yeah, Paul, if you could let them in the waiting room. I need to switch tabs to do that. So if you could do that for me, please. You see. I don't see anybody here. So it should be okay. Okay. All right. So as you can see here, the figures be a little bit worse every time. So we are now in the high 1800 and 60s. So every week, it's incrementally getting a little bit worse. So, and we can see as well what happened in the in the stock market. Things are starting to turn slowly. So obviously, as you can say, the two main things that we look at is job figures and inflation right now, and those then determine the interest rate decisions when those are, when it's time to, for the Monetary Policy Committee to meet. Nothing major today. Again, we already have these, the red announcements. We already had the pound retail sales. Again, figures getting steadily worse, minus 1.2% on last year. Today, we're going to have the Canadian dollar at 1:30 p.m. Again, retail sales expected to get worse again. If we look at next week, come on. If you look at next week, apart from kind of a lot of manufacturing figures, we're going to have the Canadian dollar interest rate decision. Advanced GDP in the US, but it's not one of the major announcements. And the most important one for the week is the PCE price index on Friday. It's the main index that's used for interest rate decisions in the US. So it's obviously it's important to take note of these things, because any difference from what is expected can cause an immediate adjustment in the markets. So not much happening from that point of view. Let's see what's it seems to have, we had a minor tsunami in the stock market. If we look at what happened in the S&P 500, for example, we go on to the daily. So we can see that the market has turned. Let me just make it maybe a little bit. Has created a top now, and it's moving quite a bit lower. This is to be expected. I mean, nothing too major at the moment. Kind of like the trend is still up, and it will not change until we go down below 5,400. But at the moment, obviously, we need to take notice, because it's been a significant correction already. Over 2% over the last few sessions, and especially in the technology shares, because we know that both the Nasdaq and the S&P 500 are dominated by technology shares, and those are the ones that have actually pulled the market lower. You can see in the Nasdaq as well, from 21,000, which we hit on 4 hour. We hit last week, on Thursday last week, to below 20,000. So that's about 1,000 over 20 is about 5% drop. Okay, so nothing to at this stage to panic about, but it could be we could start seeing a repositioning of portfolios a little bit away from technology shares into other sectors. It's like a sector rotation as the market is preparing for a downturn. Okay, because because remember that technology shares are the ones that are boomed, but at the same time, if the market turns are the one, they are lots to lose, because the higher you climb, the more you have to fall as well. So this is what we're talking last week about, defensive positions in options and other things, because if you have if a stock portfolio is a big part of your investments, then it's not as easy to just sell everything, for example, and invest into other things. But you might want to keep your portfolio, but buy something that would appreciate if prices go down, so that you can keep your portfolio pretty much untouched. But at the same time, the value of it will not change much. Okay, so in terms of going into looking at Bitcoin, there have been a few things to notice. Obviously, we had on the beginning of July price that went down all the way from where we are pretty much right now, from the mid 60s to almost touching the 50,000 level that we had marked in the charts. Between 52 and 50, that would have been an excellent buying zone. And this was mainly due to two factors. One of it is was being widely publicized, which was Germany selling a big, lots of quite a few hundred millions of worth of Bitcoin that they had confiscated in January of this year. That obviously caused they've been accused actually of market manipulation, because of the speed of the sell-off, which has now been completed, by the way. So they got no more Bitcoin to sell. And at the same time, so towards the end of last week, we also there were signs that the miners' capitulation is coming to an end. When I say miners' capitulation, it means that all the mining companies that were not strong enough to withstand the effects of the halving had to pretty much divest of the Bitcoin they had accumulated. They had to sell them on to try to stay alive, or some companies actually have been then the subject of a buyout by other companies. But again, this pretty much has almost come to an end now. So they're probably the two largest factors that push the prices lower are now finished. So what has that caused is a structure that like this, which is kind of like you would recognize if you're trading, is kind of like a bullish pennant that would have the next leg, the next target around the $100,000 mark. So we still, as I said, no news, good news in a sense. So we still, after 4 months of creating the new all-time high, and we had a little bit of panic that's been digested by the market, and price are now quite happily climbing up to the mid 60s again, and only within around a 10% of the pretty much of the all-time high that we could go and touch again if with another pause and then another push. Now, the interesting thing to see as well is that when we go and have a look at what happened when the prices went really low. So let's mark when the prices were low here. Okay, so we are on the 4th and 5th, let's say from the 5th to the 10th or the 12th of July. Okay, so that week, last week pretty much, to the end of last week. And let's see what happened to the Bitcoin ETFs that show us the institutional flow of funds from the 5th to the 12th. What was happening? Okay, can you see the inflows in the Bitcoin ETFs while Bitcoin was at its lowest? Okay, so obviously you can see this then even on the kind of Bitcoin institution, Bitcoin figures, if you go in to look onto the chain, and the same thing would be seen, like whales actually accumulating Bitcoins during the dip. And it is significant because it's at a time where there was like maximum selling pressure on Bitcoin, and that was the time where the maximum buying from the institution and the public came in. Okay, so you can see here in terms of dollars, 150, 300 million, 200 million, 150, 300, 400. So this is significant buying pressure, and we can see that now the Bitcoin ETFs have accumulated $16.5 billion. Okay, so within that time, so still the Grayscale ETFs keeps on balance and off, so reducing the number of Bitcoin that they have, while everybody else is accumulating. Okay, so if we see now, obviously, IBIT is still is taking the number one and almost like distance by 20% to Grayscale. But if we look at Fidelity, ARK Invest, and Bit, so the next three are now pretty much the same size as Grayscale. And we started from a point in which Grayscale dwarfed everybody else because they had over 620,000 Bitcoins, and they're now left with 273. So this is, it's not because we want to see one company is better than the other, but just to show you that most of the selling pressure has come from Grayscale, and now they also, slowly running out of coins to sell, so that the effect of these inflows will be felt more on Bitcoin price than it has done so far. So these are the numbers. These are the same numbers, but in Bitcoin, in Bitcoins rather than in US dollars. And this again, we come almost at 300,000 Bitcoins accumulated by ETFs. So what does 300,000 mean in terms of percentage of total Bitcoins? Remember, Bitcoin maximum, at the moment, we haven't even got to 20 million, but the maximum number is going to be 21 million. So 300,000 would represent 1.5% of all Bitcoins ever minted. Now, it's not all Bitcoins in circulation because a lot of Bitcoins would have been lost and will not get into circulation anymore. But just to give us an idea, so what we've seen, the increase between 40,000 and 74,000, or even if we're thinking about 65,000 where we are now, which is more than a 50% increase, has been caused by moving 1.5% of Bitcoin. So what could happen when the institutional buying power will get to 5-10% of Bitcoin circulation? Just do your maths, and you'll come to some idea of where the price of Bitcoin can get to from where we are right now. Now there is another very big news for next week, which is the Ethereum ETF. The Ethereum ETF will start trading on the 23rd. So 23rd, today is 19th, is Friday. So it's going to be Tuesday. Okay, so now the Ethereum ETFs, we have the tickers, they're all on Bloomberg. They now have published their management fees, and so there is a little kind of a management fee battle to see who can offer the smallest fee. And now so there are kind of reduced fees at the launch, to attract, although roughly the fee will be 0.25%. But I think there's going to be the low offer is Templeton at 0.19%. I think there's somebody else that I read somewhere that is today they're going to offer 0.15%. You know, so obviously they're all going to fight to accumulate as much of the inflows as possible. So clearly, BlackRock will probably have the lion's share of the inflows. But again, what will this do to Ethereum price remains to be seen, because we see what happened to Bitcoin after. Oops, come on. Where are we? Let me get this. So this is the effect of the immediate launch of the ETF. Okay. So because it's you know what they always say is kind of like buy the rumor, sell the news. Okay. So I mean, if the same thing happens like in the past, there might be a drop in price of Ethereum in the first few days before before the effects of the the ETF inflows will make themselves felt. What happened in Bitcoin? So that was, again, Bitcoin has a lot more clout in the market than Ethereum, but we went from 43,000 to 73. If we take this to, let me go on to Ethereum. We look at the Ethereum chart. What can we expect? So let me take a few of these away. So at the moment we are at 3,400. Okay. So if we were to have a kind of like a sell-off following the news, which is fairly possible, so we could then retouch, I think, this area here, or the kind of low 3,000, or even just below, because you can see there's an area of demand that's been already touched several times in the past. We could very well touch it again. In terms of where to go from here, and if we were to do a similar thing that Bitcoin did, and move, let's say, from where we are right now, 3,500, let's say a 50% move will take us to an all-time high for Ethereum around the $5,000 mark. Okay, so that's a kind of like a immediate expectation for the next couple of months. If obviously there is interest in this product, and if, as everybody thinks, there's going to be like some serious flows into Ethereum as well. Now, Bitcoin has done 16 billion. We can't expect the same for Ethereum, but we'll probably be much lower in the, at maturity. We might expect maybe 5 billion or so, something around that figure. But remember that at the moment, even with the Bitcoin ETF, we're exceeding all expectations. So already at 16 billion that we are right now, that was pretty much the expectation for the first year of trading. So already now, after after less than 6 months, we exceeded the yearly targets for Bitcoin. So where could that take us for then possible future products? Is there going to be a Solana ETF? Today we had another product that was launched in Europe by 21 Shares, which was an injective protocol investment product as well. I will have a look in a second. So we have now opened the door, especially I think with the Ethereum ETF, to the altcoin world, and we can see so there are several providers that are testing the markets to see what the demand is from the public to these, you know, for these products. And the sky is the limit now, because it's not just Bitcoin. So if we move away from Ethereum, if there is even another single one after that, that means that any other product could be then presented to the market. But the interesting thing is there is like institutional demand, because these are not like individual like me and you. These are like investment manager, investment providers. They are putting their products for people that don't want to do this directly on their own wallets, as you can do. You know, you can, by now all of you will have a crypto account, so all of you can go out and buy Ethereum, you know, on your MetaMask or on your, you know, on your Ledger or on Binance, wherever you want. But many people are not, you know, wouldn't want to do that, or they cannot do that because they're institutions, and their statute doesn't allow them to do that. So the existence of an institutional grade product that they can use to invest in these kind of crypto products is essential for them to participate. And this is why we're thinking that, apart from, you know, what it can do to the price in the short term, is a very important step for the maturity of crypto in general, to become the next, you know, the next asset class that anybody can invest in. And this is what's happening right now. So these steps are being put in place. Let me see, where is that's the announcement by 21 Shares. You can see it launches an injective protocol staking. So ETP, this is not an ETF because it's not it's launched in the US. It's a European product, and obviously, you know, the flows in Europe are a lot less than they are in the US. But still, you know, it's important that, you know, many of you maybe, you know, haven't heard about injective protocol, but still. But still, you know, the fact that these products are available, and people now that traditionally wouldn't have invested in crypto have these possibilities, then it is definitely important. Okay, so these things, for example, you can buy now through Interactive Brokers, Saxo Bank, Swissquote, and eToro. Okay, so that the number of people that now can invest in a product like this, it's a lot larger than the people like me and you that are already like crypto savvy and can buy this in the decentralized world. By the way, sorry, I forgot to tell you, I know last week we announced that we are going to have a session with Jonathan about Cardano, but Jonathan is away as well because his son is graduating as well today. His oldest son, so he couldn't do this. So we'll do it. We said we'll postpone it, and we'll probably do it next week. Okay, moving on. There's another thing that I wanted to show you, and just like some food for thought. Okay. Which is this one. When we're talking about, you know, what's the effect of all the money printing that we had, remember that basically all the dollars ever printed, okay, from way back to today, 40% of those have been printed in the last 4 years since the pandemic. Okay, so obviously that has a big effect, and that caused, you know, this money to be spent everywhere. In, you know, stock market, you know, that caused inflation, you know, in crypto as well. So in a way, it caused like the crypto jump of 2021 as well. But the one thing that to make you realize is that this is growing now to become the biggest expense of the US. And in June, we actually, the money spent to service the debt, okay, so to pay the interest on the US debt was 30% of all tax revenues. Okay, so 30% of everything the US takes in from tax is spent on paying interest on bonds. Now, this will soon become, by by the end of this year will become the single largest expense of the U.S. government. Okay, bigger than Medicare, biggest than defense spending, bigger anything else you can think of. This is going to be the main item, and it's only going to get bigger, because the thing is that at the moment, as you can see here, so still these are the green one is the federal government revenue, and the red line is the federal government spending. So, and the gap is getting larger all the time. So this is obviously what happened in 2020, and it was obviously when the pandemic happened. But the reality is that for decades, the US has been spending more than they're generating in revenues, and it is getting now to a point that that this is going to become the largest problems. So what is going to happen? What's the next step? What's going to happen? I mean, there are noises. Obviously, a lot of countries are getting, very are starting to distance themselves from the US dollar slowly. And this, so one of the things that was noticed this year, and we saw this in the charts in the price. So where would you see that? So anybody has an idea, where would you see that central banks now are moving slightly away? I'm not saying moving away, but they're starting to reduce their dependence on the US dollar for their reserves. Where would you see? What else they could use for their reserves if they were not using the US dollar? Anybody has any ideas?
Probably gold and Bitcoin.
Shall we bring it up in? Yeah, not so much Bitcoin, not Bitcoin in this case, not for central banks, but definitely precious metals. So this
would bonds be a consideration, Luca?
Sorry?
Would bonds be a consideration for central banks?
Yeah, but this is so the US. So what are the two biggest bond issuers? Are the US and Japan. Okay, so what happened to gold this year? We can all see it. We were at $1,100 in beginning of the year. Where are we? Yeah, just below $2,000 at the moment. We are just short of 2,005. Okay, so today prices have gone down actually, but we touched 2,481 on Monday. Okay, so that's a 25% increase in the price of dollar. If we look at silver, which is another metal, there has got some. Where is my silver? Where did I put my silver? Okay, let me just bring it up. Bring it up here. It's easier. Become everything a lot slower when Zoom is on. Okay, so silver has shown a similar thing to gold in 2024. It's gone from $22 to 30, almost like 33. So almost at the moment we are at 29, but even at 29, that would be like a 40% increase. At 33 would be 50% increase. So it's you can see the signs if you know where to look. Okay, so bear in mind of what may happen, and obviously the noise that there are, that we are maybe there's a new currency that's being created for the BRICS nation. But the one thing that's important to realize is that at the moment, as we speak, there is still not an alternative for the US dollar on the market. But this process of de-dollarization of the world economy, if it starts, it's not something that happens overnight. It's something that will happen over time, and as there are more and more dollars being printed, and and the demand for dollars is not as strong as it was before, that will start be felt in the prices in the prices of dollars and dollar denominated assets. So it's it's a consideration that you need to have if you if you have a US dollar exposure. So if you have money in the US dollars, make sure that it's working well, because the effect of the exposure to the dollar and possible inflation, that is a real inflation in the US dollar assets, is going to be something else as we go into the next few years. But as I said, this is not a process that will happen tomorrow in the next 3 months. It will take years and years for that to happen. But kind of the writing is on the lines now. Is on the line now, and we'll get to the point where simply the US will not be able to raise enough taxes to to actually carry on paying interest rates at this level. So what are the options is that they either just reset the US dollar completely. They did what they did in 1971 and say, look, I'm sorry guys, we can't afford to pay this anymore, so we're going to have to find a compromise, or the other option is that there is a process of the world economy moving towards something else. And obviously, we understand, being in crypto, that now we have a digital alternative to that there is to the concept of moving value around, moving money around, and just repricing everything, because at the end of the day, money is just a language that's created to express value to one another. So nobody says that that money itself is going to be controlled by one single entity, and that wasn't the case when money was invented. So we might get to the position now where governments are stripped of the potential to control the way that we transact with one another, and we might be going towards a different paradigm completely, and that would cause huge waves on more than one market, more than one reality, and the world that we're going towards may look completely different from the world that we know today. So that's my end of day kind of outlook. Let me stop sharing now. We almost have been early as I got to prepare for the other session I'll do now on a Friday for AW on more on strategic investing and solid assets. So I've got time for a couple of questions if you want, and then we'll call it a day for this week. Anybody would like to ask any questions?
Luca, hi, if I may. Morning, everybody. I'd like to sort of just ask 2 questions, nothing hectic. So the first one is, and I guess it's the big burning question, and it comes off the back of what you were talking about, the US dollar and the gap and the increase of the interest payments, right? What technically happens because at some point it's going to get to a point where the interest payments are going to be unattainable. They won't be able to maintain those payments. What happens if that gap just gets so big, or B, they default? So that's my first question. And then my second question, totally unrelated, and I know it's not investment advice, so I fully get that. But in today's world where we live and looking at where everything is going and looking at all these numbers and looking at people de-dollarizing, what would you say would be a good percentage of your portfolio to be holding in crypto? And then what percentage of that would you say should be Bitcoin versus altcoins? Those are my two questions. Thank you.
Yeah, there's not kind of like a question that it can be answered like this in 2 minutes, to be honest with you, because it's you know, I would say in a time where you know, money represents assets, but if money it's also a good in itself. So what many people don't understand is that money is a market good. Okay, just that you don't buy for itself, but you buy for what you can get with it. So it's basically you buy because it's kind of like ease or transfer. Now, if there's a problem with money, and money is something that you don't want to hold because it's not holding its value, that means that then the alternative that you have, if you have enough of it, is to hold your value instead of holding it in money, to hold it in assets. So any sorts of assets, if the dollar, let's say, goes down and they start printing double the amount of dollars, obviously you will lose 50% of the value if you have dollars in the bank. But if you have a house or if you have a you know, brick of gold, that would be repriced in the new you know, monetary you know, reality of what is the dollar now worth. So for me, I would say it's the time to make sure that you have assets, you know, rather than just money. Now, what those assets can be and how you build a solid portfolio for the long term is what we talk about in the next session, actually, for AIW, and it's something that it doesn't just descend. It's not the same for everybody, but you need to look at individual circumstances. In terms of, I can tell you what I do. You know, when I started investing in crypto, I bought about 30% of my portfolio in crypto, and that's a very high figure, you know, generally speaking. But it's, in any case, you know, as with everything, not to put all your eggs in one basket is probably the best advice you can get, and you should be, you know, diversified in a number of different asset classes, you know, at least 4 or 5, to make sure that, because they're always, you know, this is what big institutions do. They do asset rotation, because there are times the market goes on in cycles. Okay, so there are times when it's good to take risks, and there's a time where it's good to take less risks. Okay, and different assets work the best in different parts of the market cycle. So, for example, if there was like a collapse, let's say, of the stock market, and you still wanted to buy some shares of anything, then in those cases, for example, utilities will do much better than, you know, than other companies. They normally would be like a boring investment, buying kind of like water companies, or, you know, something like this, you know. But in times when the market is not doing well, there are products that you're still going to go out and buy toothpaste, you know, even if the market is not doing well. So you know, the structure, or how you structure your portfolio is something that, you know, will take some talking, and looking at your individual circumstances, and that's in a way, it's the work of individual financial advisors, you know, independent financial advisors. But yeah, if it's something that you're interested in, is what we talk about every Friday in the AIW session. If you're interested, I can send you a link, and you can talk then to Paulina about you know, if you wanted to join a community. Okay.
Yes, please, Luca. Thank you. Any comments on the US defaulting on the dollar, or on the debt rather?
Well, I'll say defaulting, they would just say, "Oh, this is what the dollar is worth now." At the end of the day, you know, and they just need to. They can print as many dollars as you like. So technically, there will never be a default. The same way as because everything is priced in dollars. So whether there are, I don't know, $30 trillion around in the market or 200, there's still going to be $1 around. Whether people want to hold it, it's a different matter. You know, so if you think about a dollar defaulting, it's basically everything that you hold in money terms will pretty much like be worth nothing. So then it's more important to have some vegetables growing in your garden. And because we're not going to be talking about investing, but it's going to be talking about just finding food to go on the table in that case. So yeah, it's before we get to that stage, there's going to be like a meeting. So this is what when we're talking about the Great Reset, you know, they're going to get to the point like they did in 1971. I think, well, I'm sorry, let's start something else. Let's start a different system. You know, so they will come to a point where they say, well, you'll own nothing and be happy, you know, because we've decided that you know, we're not going to hold this promise anymore that the money is worth anything, and we'll do things a different way. So there is not a, you know, a kind of like something that you can do something about if the dollar loses value. It's just about, you know, what would you do in that case if there was no money around? How would you live your daily life? And that's what you know, in a way, you got to think about. And I know that cryptocurrencies offer also a solution, especially things like limited in numbers, like Bitcoin or Cardano or other cryptocurrencies that got like a definite number of coins that have been emitted, because people will still have a necessity to swap things around. So if they don't want to do, they want to use the Zimbabwean dollars or the euro or the US dollar or anything else, then they will find something else that people, you know, that people use to exchange value, like they did in Kenya, exchanging mobile minutes. So there'll be something else that will replace the dollars. The idea is having something that is of value, even if money loses its value. And that's the most important thing that I can, you know, bit of advice I can give you. Just think about your assets rather than the amount of money that you hold.
Thank you, Luca. That's very helpful. And I am interested in joining the community, so if you could send me the link, that would be wonderful.
Okay, fine. I'll get Paulina on the case. Okay, thank you very much, everyone. I will then we'll be back next week on Friday. I'll speak to Jonathan during the week, so hopefully we'll do a session on decentralized. In this case, in Cardano, but the same concepts can be applied to other blockchains as well. So it's mainly how you do things, you know, in the crypto world without exchanges, but doing things yourself. So we look at different you know, different markets within crypto. All right. So have a great weekend, and I will see you. I will see you all next week.
Good luck with the graduation.
Goodbye. Thank you very much. Thank you. Goodbye, everyone. Bye-bye.